This week on This Broker Life, we are talking to CMI, and they are, if you've ever been to a trade show where CMI is present, you won't believe the size of some of their booths that are there. They put a lot of effort into these trade shows. We're going to talk to them about why that is, but we're also going to get advice from them on what you should be asking your lender partners and other partners at trade shows when you start hitting these trade shows again in person this year. Let's go.
Better listen up, we about to make it happen. So hot, we burn it up. We just can't get enough. Get down now, have some fun, 'cause we about to make it, we about to make it happen.
All right. Well, welcome to This Broker Life this week. And we've got Bryan Jaskolka, who is with CMI Financial Group, who's joining us today. CMI, I always talk about, Bryan, that you guys have the most epic trade show booth. So I can't wait to ask you about that. But we got lots of topics here as well. How are you today?
I'm doing great. Thanks. Really appreciate the invitation, the opportunity to be here with yourself and your listeners. Thank you for that.
Well, we're thrilled to have you, and thank you so much for joining us. And you know, let's get started. If there's somebody in the industry, I know you're pretty well known, but if there's somebody in the industry that doesn't know you yet, let's get started with your background, maybe, and you can tell us a little bit about yourself, Bryan.
Sure. Well, I appreciate the question. I'm your sort of cliche, classic entrepreneur. I came from a very non-traditional background in terms of getting into the mortgage and finance industries. And in that sense, you know, I founded CMI as a mortgage broker representing borrowers back, 2005. So, you know, we're coming up on 16, 17 years now of being around. When I founded the company, I was pretty young. You know, I was entrepreneurial. I had a technology background. I had a marketing background. I didn't know a lick about mortgages, and decided, hey, you know, this seemed like a great field to, you know, put some of my marketing and technology chops to use, so to speak. And so I got into the mortgage business initially, and you know, it just sort of kind of took off from us at the onset. So, you know, the first 5 years of our business, we really worked on, you know, working with borrowers. We did a lot of alternative financing. We did some bank financing, and this was all sort of leading up to the Great Recession, as people like to call it. Once that happened, however, our business really started to change. And as far back as 2012, 2013, we started to move into the lending side. You know, today we don't have any borrower representation whatsoever. We're Canada's largest private lender, obviously, as you may know, and your listeners may know. And it's been a wild ride, certainly. But you know, we are a growth company, and that you know, that business has really sort of started from, as sort of cliche as it may sound, my parents' basement. You know, back when I was probably 21 years old, honestly, at the time.
That's crazy. That's like the Steve Jobs story, right? Where he started Amazon in the basement, and he's got, you know, the cardboard Amazon behind him.
Yeah.
And now where he is today, or maybe you're Canada's next Steve Jobs. You never know, well, right?
But I don't know. I'd compare myself to Steve Jobs, but you know, we're pushing pretty hard. That's for sure.
Yeah, that's great. And let's talk about that a little bit, because the growth company is an interesting topic. I want to sort of dig a little deeper into that. And what do you mean by growth company? I mean, obviously, when you're already the largest private lender in Canada, what makes you still a growth company, I guess, is my best question.
You know, it's a fair question, and it's one that, particularly because of, you know, the success we've now been able to achieve, when we say that, you know, people think that it's a marketing pitch, you know, and the truth is, in my view, what makes us a growth company is that if we look at year over year, you know, our business tends to continue to grow at around 50% growth rates, and you know, that's true last year, even the year prior. I think we're going back 5, 6, 7 years plus of that now. And we have the same designs for this year. In fact, to some extent, our growth is even accelerating. So, you know, as much as we are by volume and a number of metrics, the largest residential private lender out there, we still see the marketplace as being relatively untapped for us. And that's because, each company that exists, either tends to be regional, or they may have a very particular product focus, but there aren't too many national private lending companies which have a diversified product offering, where a mortgage broker can say, in Edmonton, I need a second, or in Toronto, I need a first, and my customer has bad credit in this rural market, I need that, or I need a low rate, first mortgage here or there. So our vision is to be able to provide a national product offering where we're able to cater to, a variety of loan to values, a variety of rate structures, and really sort of become that one-stop shop for private lending. In my view, it doesn't exist today right now in Canada. And even our market share, as large as we may be, I still view that as being under 5% of the private market. So I think there's a lot of opportunity for us to continue to grow that market share. And that's certainly our plan of action. And so as much as we, may be seen as the juggernaut, so to speak, already in the private space, we're not slowing down. If anything, we're now taking those resources, the experience we've built, the amazing team that we have behind us, and we're trying to accelerate, really, if anything, into that. So that's why we call ourselves a growth company. I mean, and my HR department would agree with that, considering that we seem to have an endless list of dozens of people we're hiring, and every time I tell them that I'm not going to hire anymore, the inside joke in the company means, oh, well, here comes another hiring wave, right? So
That's right. And that's typical of a growth company, right? Always be recruiting. That's essentially what you're always doing, right? And creating positions if you need them too. You want to be ready for the growth, right? And that's the big key. It sounds like you guys really, really are. Let's talk a little bit about, you talked about the market, you talked about Edmonton there, but you also have this huge explosion in housing prices pretty much across the nation. What does that mean for CMI? Like, is this something that worries you? What are your thoughts on just this huge price explosion?
I'd be dishonest if I said that it doesn't concern me. I think, to be candid, it probably concerns any prudent risk manager or lender in the real estate space. If I were to describe my optimal lending environment, it would be one where home prices were, going up 5% a year at a non-exciting pace that was predictable and, was easy to navigate in that sense. Now that's not to say that obviously the price growth hasn't benefited us. Of course it has. Mortgages which we have held on our books historically are at, increasingly reduced loan to values, which is of course great for portfolio quality. Ultimately larger home prices does mean larger loans, which does increase the opportunity as a lender to grow your book and grow your size of lending. So, I mean, those are positive aspects for us, but it does make us nervous when we look at a marketplace and the value may have gone up 40%. We definitely consider that as part of our lending analysis to determine, do we feel comfortable with that market value? Do we think it's sustainable? And I spend a lot of time telling my staff and them in turn telling brokers, look, market's been great right now. We can't assume that it's going to be like that forever. So we still really try and bring it back to basic prudent lending principles. If someone can't afford that property, we're not going to do a loan to them, and we get this sort of commentary sometimes from our broker partners to say, well, the home will be up 20% next year, so don't worry about it. You're safe. And I say to myself, well, yes, it's going to be until it's not. And if it went up 20 or 40%, what if it goes down 40%, right? Because whatever comes up does go down eventually. And my view is the faster it goes up, the harder it could revert. So in that sense, we've become a little bit more cautious, at least around underwriting fundamentals. And for us, that really means affordability. We want to make sure if we're lending to someone that we're helping them, that we're creating an exit strategy for them, that we're creating an exit strategy for ourselves, and that if the market does go into a reversal, that this person can actually afford the loan that we're giving them. If we can't tick those boxes, we're not going to be excited about doing the loan. Now, there's always exceptions to the rule. Obviously, someone at an incredibly low loan to value, or, it's not that we don't do any equity lending, but if we're going to go up to 85% in a small town or even in GTA and lend someone $1 million, like, I want to know that they can afford to make those payments.
Yeah, absolutely. And you bring up an interesting point about the market, what goes up must come down. Let's talk a little bit about that, because is that an expectation, do you think, that most lenders will have, including yourselves now, that we will see a retraction, or do you think it will just stall but stay kind of where it is?
My view is that, sort of broadly speaking, Canada is very well positioned in the current environment. We are ultimately a commodities driven economy. There's a lot of oil, gas, wheat, uranium, natural resources that are highly sought after in the world today. And in fact, because of some global events, have actually become even more sought after and more limited in terms of where they can be sourced. So, we're starting to see that even with the outperformance of the Canadian markets compared to some of the global markets. And I think, so in that sense, Canada is well positioned. So I don't think we necessarily anticipate a major reversal or a crash, but just, you always have to have that in the back of your mind as a lender, because I think once you start to lose that concept and you kind of move into unhinged lending where, everything is always going to be better. And that leads, to trouble down the road. So, I do think that ultimately there's a lot of policy tools that are available to the Canadian government to slow lending without necessarily crashing the markets. And ultimately, the job market and other fundamentals, as well as immigration, are all very net positive for the Canadian housing market as a whole. So, our outlook does tend to still remain positive, but just because of that price run up, we like to be a little bit cautious in terms of that approach and just make sure we don't lose sight of the fact that, nothing goes on forever.
Right. Exactly. Yeah. Yeah. And I don't think necessarily, at least from my view, that we'll see a huge retraction on values. But I think, and again, for the same reasons you've just said too, about how the government will probably manage that. But certainly understandable that from a risk perspective, a lender might want to prep for that just in case. Right.
Just in case. Right.
Yeah. Exactly. Exactly. Let's talk a little bit about CMI, and in particular, you guys are pretty well known for your philanthropy. Can you talk a little bit about why you guys give back so much, where you give back, and how that's all going, what your plans are as moving forward?
Well, thank you for that. And that's a great question and compliment, honestly. And I think that sort of stems from maybe my, you could say, upbringing, and just sort of how I've come to be and how our business has come to be. I wasn't given any of this, to be candid. I've had to work for it, and, the people who are part of our team have had to work for that. And, I think that we're always very cognizant of those less fortunate than ourselves. And I always like to remind myself and, our team of where we've come from. So in that sense, it's always been really important to me to try and sort of give back to, the local communities and charitable endeavors that are important to ourselves or our staff. And I guess you could say it's sort of a bit of an internal promise I made to myself when I was a lot younger, which was that, one day, hopefully, that I would be successful and I would be in a position that I could, make a difference in a charitable sense. And, so I think that what we've been doing is really just sort of the beginnings of that. And I hope that as time goes on and as our success permits, that we'll be able to increase, the amount of giving that we do, both sort of on a financial level, but ultimately even on an organizational level, as we become more involved with, different organizations. So it is something that's important to us. And I think it's just, like I said, it's sort of fundamental to how we've come to be as a business, that we don't want to lose sight of everyone who, isn't where we are today.
Well, congratulations on all that philanthropy and the plans for that, because, I think that is so important for not just a company, but even for the individual broker, individual agent to give back. I mean, we're so lucky in this industry to have success almost across the board. I know newbies to the industry take some time to build that up. So some of them might be looking at me going, what are you talking about? I'm not there yet. But if you're not, that's okay. You probably will be. And when you do get to that point, it's important to give back for sure. We're in an interesting season in this industry, and it's the award season. And it's funny because our BHB TV reach goes to the States, it goes across Canada, and you don't see it nearly as much in the States. The award season just doesn't seem to exist down there in the same way that it does in Canada. Let's talk about mortgage award season in Canada right now. Are you guys nominated for anything? And what are your thoughts on the award season right now?
I do believe we are nominated for a couple of pending awards. The awards is something that are, to me, it's sort of, how do I say this? It's an important part of the industry because it provides an opportunity to recognize a lot of the success that's out there from different people who are, building their businesses. And there's a lot of different sort of facets to do that. We actually sponsor a number of awards on both of the two major award platforms as well. And part of that is, we feel it's important to support the organizations themselves. We're looking to bring up individuals and companies within the industry and sort of give them an opportunity to sort of showcase their success, right? So, I think when you look at the mortgage industry, you're always going to see, different personas and different people who, some people love the awards, some people are not a fan of awards, some people are not even aware it may be award season. Though I'll give credit to everybody. I think they do a pretty good job these days of building awareness within the industry. But for us, to be candid, and I hope I don't offend anyone with this answer, but it's not so much winning the awards that's important for me. As an organization or personally, we definitely appreciate any recognition we receive, but I do think it's really important for particularly small and mid-sized operators and brokers particularly, and even BDMs on the lender level to be able to have an ability to be recognized throughout the industry and through their peers. And so, I'm really supportive of that.
Do you think that it's fair though? Let me ask you this question in hopefully a nicer, and feel free to not answer it if it's too tough, but we try to be edgy here on this broker life. And I'm going to say something that I think, most people probably see anyway, but it just seems to me over the last 2 to 3 years, especially paying more attention to it, that the awards are always the same people being nominated. Like, I don't think Vegas would even bet on these awards, right? Because they know whose names are going to pop up. So you mentioned a couple of things there. You said, this is a great opportunity for mortgage agents and brokers to get their name out there. But is it is that really happening right in these awards, or are we starting to see that they're kind of consistently the same people over and over and over again?
It's a fair point, and I would be lying if I said that we don't see some of those same trends. I think that one thing that the awards could benefit from would be more transparency with how the selections are done and how ultimately the awards are given. I think that there is this perception, right or wrong, that there may be sort of some favoritism that gets played. And there's also sort of some perception that, like you said, certain people or certain organizations are constantly sort of in the nominations. And I think there's always going to be some fairness to that. For example, using a technology example, Microsoft is often in, technology awards, and it's because they're a leader in their space. So I don't think it's, I think we have to be careful and find a balance in, a merit-driven society where, those who are successful, you're going to see a higher prevalence of them being nominated and ultimately winning. And I think that there's some natural, there's some reality to that. But at the same time, I think that credibility would be enhanced if there was just more transparency around how the selections were done. And I think that people would feel better about that and understand, because when you do have some of these large global firms that, win international awards, it's sort of obvious to people, oh, well, why they would be winning. But in the mortgage industry, there's always been this concern of, is someone winning because they're the friend of X, or is someone winning because, they're the sponsor of Y? And I think those are fair concerns that ultimately will need to be addressed in order for the awards to continue to grow themselves and to really take on that authoritative sort of perspective that they're hoping to achieve.
Yeah, I agree with you. And I think, certainly we're not saying that those people that are nominated all the time aren't deserving of it. They certainly are. I mean, some of those names you see, that they're industry icons in many ways, in a lot of cases. So, but it's interesting. I think that transparency would help a lot to say, hey, this person's still right at the top, and here's why. And so, and so now it makes total sense that they're being nominated for it, right? Or the company or whatever. So, I think it's great to be recognized. I think it shows the effort that people are putting into the industry. But again, like you say, having a little bit more transparency might be helpful in those cases. And usually with these award shows come a lot of trade shows. Usually it's symposiums or annual conventions and things like that too. So let's talk about that, because CMI, I remember, I got to tell you a story, because when we started Mortgage Magnates in 2019, we went to the Ottawa Symposium for MPC. It was our very first appearance at a trade show, and we had our trade show booth, very first one, very proud of it. It was just your basic, just fitted over the trade show platform, and your 8-foot table, and they placed me next to CMI. And you guys had probably about 3 booths purchased in space, and it was in the corner, and it was this elaborate, huge. You had a sofa, you had TVs, you had structures and things that I'm thinking, wow, that is where we need to get to, because that is quite the booth. So talk to me about that, because there's some opinions out there too that trade shows, the brokers aren't asking enough good questions to really benefit being there. And we're going to get to that topic in a second, because I think there's still huge benefit in it. But talk to me about why you guys have such a laser focus on trade shows and put so much effort and budget into it.
It's a great question, and it almost makes me cry a little bit, because right before COVID, we built this new trade show strategy. And, I actually dedicated my entire holiday in 2019 over the winter break to polishing our trade show platform for 2020. We had these amazing booths that we built. We had gone through a rebranding process for our business as part of this as well. And I guess you could say, because I have a bit of a marketing background, brand image is important for me. And it was really sort of a bit of a coming out period for CMI. And of course, I don't think anyone at this point can't remember, but about 3 months later, COVID hit, right? And so we had about a quarter, or 3 months worth of trade shows that we were able to get out and bring our booths to, and the feedback we received was tremendous. And then, almost as fast as that all came about, it all shut down. And so it was very sad for us. I mean, monetary perspective aside, it was an opportunity in our view to help elevate the industry and elevate the trade shows, and elevate our business. And, I'm really hopeful and looking forward to this year. I'm hoping that will be something that's going to start to come back. And we've committed to quite a few trade shows, and do plan to be bringing our booths out to as many of those shows as we can. So I guess you could say, when I looked at it, we looked at other industries. So I think too often people look at just their peers within the same industry. And, I was looking at not compared to other mortgage, wholesale companies, but compared to other industries as a whole, and said to myself, well, I want to have a booth that reflects the vision of our company, so that when people come and they're speaking with our staff, that they understand that, CMI is a force to be reckoned with, I guess you could say, right? And we wanted there to be that sort of wow factor. So that's sort of taken its way through our booth, our swag, our staff, the videos we've done, bringing technology into that platform. So that was really important to us. And, we even, we have people other lenders who will come up to us and say, hey, we were at this trade show and I saw your bag, or I saw your this or that swag. Can I get some? So that's really nice for me to hear, because we do put a lot of effort into that program. And, it's nice to see that people do see that and recognize that. So, to boil it all down, part of it was selfish. We wanted people to see CMI how we see ourselves. And part of it was sort of altruistic, in that we're hoping to push the industry and the caliber of the trade shows to a higher level as well. And I think that will foster more engagement from the brokerage community as a whole.
Yeah, I agree. And it's interesting you mentioned the swag, and obviously, each trade show always has, a good chunk of swag pirates. That's all they're doing, right? They're just going from table to table and grabbing the swag, and not really asking any questions. And in some cases, it's funny. I talked at one of the trade shows to a couple of agents that did that, and it just was some of them were newer, and some of them were saying they didn't know what to ask, or they were too nervous to talk to the staff about it in case they looked stupid because they didn't know answers about what you do. Talk to us a little bit about that from the perspective of a behind that trade show table a little bit. What could a broker or agent be doing better? What kinds of questions should they be asking? And should they really even be concerned about the types of questions they're asking? Because no question is really a stupid one, I would think, at a trade show.
100%. Honestly, you like, I know it's cliche, and I thought it was cliche myself, type of, we all heard this in school. There's no such thing as a bad question, but the truth is, I don't think there's a bad question here. The purpose of the trade show from a lender's view is to gain exposure, to have an opportunity to get out there and meet participants who you may have talked to on the phone, or may have met historically, or may not have, get some of that face-to-face interaction, build a rapport, establish the relationships, and, broadly get out your message as to who you are and what's important to you as a business. So I don't think that there's any bad question at all in from the agent's perspective when they're coming to the trade show. And I love that term. I never heard that before. Swag pirates. I think that's awesome. To me, that's the lowest value of what you can achieve at a trade show. I mean, if you need a free pen, call us up. We'll ship you a pen, right?
Exactly.
It's what you should be there as an agent is there to see who's out there. I remember even when I was a junior agent, I went to these shows. I hadn't heard of half of those companies before. And so you're finding who's out there. What are they doing? Expanding your mindset around different product types. Maybe you're an A agent who hasn't done private business. So you're learning about how this can augment your business and add a value proposition for you. Or you are maybe an agent who does private lending, but you haven't heard about, CMI, or you haven't heard about company X that fits that particular niche that you're operating in. So, I think that it's there for awareness to be established for both parties. And, you're talking about the intimidation factor, and it's actually one of the driving concepts behind psychologically our booth designs. We wanted them to be inviting. We didn't want it to be sort of a firewall at the front of the table where people sat that, were hard to approach. So, our booths are sort of designed to be open and inviting, with people standing around chatting, couches for people to sit and get to know us, and, videos to watch and to be engaging, because we don't want someone to be intimidated to come talk to us. Quite the opposite. I mean, we're there because we want people to come talk to us, even if that's hey, I don't do any private lending. Why should I use CMI? Or how can this fit into my A customer base? So, I think that the reality is that the trade shows are a good opportunity, especially for novice agents, to get out there and have some visibility on what is this industry that they're participating in.
Yeah, absolutely. I agree. And make it worth your while. If you're paying to be there, especially, you bought a ticket, why aren't you asking the right questions that'll help your business? It's really important. We are obviously a lifelong learning platform. We're always talking about lifelong learning on a day in, day out basis. And so for people to not take full advantage of that, it seems strange to me to just be that, that swag pirate and then get the heck out of there. Doesn't make sense. But anyway, hopefully they do. And Bryan, this has been awesome. This has been very informative, not only from learning more about CMI and what you guys are doing, but just even the help that you've given to brokers and agents today through these questions and things like that. Is there anything else that we've kind of left out in this interview that you want to make sure you send out to the industry as a message?
I think the most important thing that I would like an agent who might be listening to this to take away, whether they deal with CMI or they don't, and whether they're in the private space yet or they're not, is to sort of understand that, while we're the lender and they're the agent, to us, it's a collaboration. So we're very much a relationship driven lender. We're interested in having a relationship with that firm, with that agent or agency over time. It's not about one transaction for us. It's not about that one borrower. And, as a lender in the wholesale mortgage market, we view our customer as the agency and the agent, as much as it is the ultimate borrower. So our team is very much sort of hand selected to be, experts in the space. They take a mentorship approach to dealing with agents. It's not a pass fail for us. People can approach us with a transaction. We may not like how it's been pitched or structured, but we're not going to just, say no automatically. We might work with that agent and say, okay, well, wouldn't it be better for your customer if we do this? Or have you thought about looking at it like that? Or, we understand what their needs are. Here are a few solutions. So we're really a solutions driven company. And we think that, mentorship and relationship is critical to that. So we want to have that relationship with the agents, with the industry. We don't think it needs to be adversarial. We don't think that people need to be intimidated by a lender or by an underwriter when they have a deal. So I think that's the number one thing that we always say to people when they first meet us. We know we're an alternative lender. We know you're coming to us probably because a bank or a B lender may have said no. That's okay. Tell us what the problem is. Don't be afraid of articulating why there's been a challenge with this customer. And at the other end of the spectrum, I'd like to hopefully get across to some of these mortgage agents who are not yet working with alternative lenders and the private space to understand that things have changed a lot over the last 5 to 10 years. When I was an agent, and I was first entering the industry, private mortgages were for people with 450 Beacon scores, right? Today, our average Beacon score is like 650, like 680, right? I mean, we deal with a lot of high caliber customers. They may be renters, rental property owners. They may be business for self. They may also just be people who are AAA borrowers and they're locked into a fixed rate mortgage. It's more cost effective for them to do, a 1 or 2 year duration second mortgage to, align that with the expiring mortgage maturity than paying a hefty penalty and refinance. So, I think that there's still this concept of, I do A mortgages, thus I don't deal with private lending and I don't deal with private customers. And that line has really blurred a lot over the years. So, I think that would be something that's important for people to understand, that private lending is not just for 450 Beacon scores anymore. Yes, we still lend to 450 Beacon scores, but we also lend to 800 Beacon scores and everything in between.
Yeah, and that's all a very, very good set of points for sure, because I think that I remember just being a BDM myself, and sometimes people would say, "Well, I'll never use your." I was with Street Capital. We had both the prime and the sort of alternative space, and some people would say, "Well, I'll never do the alternative space because I don't do that." Well, you probably do. You probably have turned away a ton of people that you could have done that with, and it just expands your business so much more to be involved with it. One last question about that, because you triggered a question in my head about the market. We were talking earlier about the housing market, and lately we've seen with the war in Ukraine and things like that. And we've seen some fixed rate changes fairly frequently, actually, sometimes twice a week in the last 3 or 4 weeks. And they're not going down, they're going up. How does that affect the private space? Like what may happen with your rates as well?
That's a great question. No one knows for sure, and things can change on a dime, but I think there's a general consensus that we've moved into an inflationary environment at this point. That does likely mean rate increases at some pace over time. And some of those gyrations that we're seeing driven by the bond markets and spreads within those various fixed income markets, they don't directly correlate to private rates, but obviously they have an impact over time. So if A rates move up, naturally B rates will move up in some version of a lockstep. And so there's always going to be this sort of hidden spread between a private loan and an A or a B channel loan. So over time, if rates go up 200 basis points in the market, I think it's fair to say that private rates would likely go up as well. Now, do they go up 150 basis points as the spread contracts? Do they go up 250 basis points as that spread widens? That's really something that nobody totally knows, and it's not well tracked in Canada. But there is that spread, just like there is between A and B and between B and private lending. Also, let's not forget, and CMI doesn't really work this way, but a lot of private lenders out there are mortgage investment corporations with leveraged bank facilities. And as those rates go up, their cost of funds go up. And what a lot of agents actually don't realize, and this is not all such lenders, but a lot of them actually are variable rate driven. So people have seen them as sort of a fixed rate product, but you really read the fine print on some of these offers pretty closely, you'll see that they're actually variable rates and they can go up. So this is something that I think brokers need to be a little bit more aware of as we move into a rising rate environment. They haven't had to worry about this before. Their customers haven't had to worry about this before. But with talk on the table of 50 basis point potential hikes at any given time, that person paying 5.99 could be at 6.5 pretty fast. So CMI's rates are all fixed, just for comparison. And so I think that's been an advantage for us as we move into that environment. But yeah, ultimately, I think that as market rates go up, private rates will go up as a whole over time. It's just a matter of exactly whether it maintains that consistent spread or we see a contraction or widening of that spread.
Yeah, I agree. And I think that pushes even more the importance of advice, and giving advice, and also expanding your, like you would look at this and you go, okay, well, private rates might go up too, so why would I get into that? Well, you really should, because when we start to talk about things like debt service ratios and things like that, it may get to a point where you do have that 800 beacon that's got a debt service ratio that your prime lender can't do it at their current rates, right? But CMI can do it, right? And so now you've got to give the advice as, whether it's consolidating debt and we're reducing your payments over time and things like that. Whatever that is, you've got to now be able to give that advice. I don't think it's going to be as easily a rate war as, it used to be. And I think that's, again, where mortgage professionals really, really have to bear down and realize that their future success, especially in a higher rate environment, comes from the advice they give.
Yeah, that's a really interesting point. And, I totally agree with that. Like my entire philosophy, I'm going back to when I was an agent, right? In my agent days, part of what made me successful was that I didn't just, pigeonhole myself into one product lineup. So even though ultimately, if I look at an aggregate amount of business that we did over time, we still did a lot of alternative and a lot of private. We still did a business at the time as well. And that experience gave me an understanding of the entire broad market, right? So to your point, it's hard to present yourself as a mortgage expert or a financing expert and then come back and say, but I have no knowledge of this, 10, 20, 30, 40% of the marketplace, because at any given time, that may be the right solution for any one of your customers. And, especially if you're someone who has, a source of business from referral partners, do you really want to tell your referral partner, sorry, I don't do alternative mortgages, so send them somewhere else? Or, a repeat customer who you helped them buy their first home 4 years ago, they've fallen on hard times all of a sudden. They call you back and they say, hey, Mr. or Mrs. Agent, we really appreciate the advice you gave us. My spouse had a job loss, or I've had a job loss. We need some money. Can you help us out? We're struggling. Do you really want to turn around and say to that customer, oh, I'm so sorry, I can't help you, call so-and-so? I think it's just, it's a narrow view, in my opinion. I hope I don't offend anyone by saying that, but if you want to be a finance and mortgage expert, then take the time to learn the broad spectrum. It's okay if you don't want to target that particular client base or market to it or feel that that's your forte. But I think to shut yourself off entirely with a mindset that says, I don't have any interest in that, or I don't have any business in that, you really position yourself over time to offer less value to your customers.
Beautifully put. That, I think, was a great final statement, actually, for the episode. And you know what, Bryan, we really appreciate everything that you've said and done here, and also, you know, just coming on the show. We really appreciate that as well. Thank you so much for your time. CMI, you're going to see them out at all the trade shows again.
Yes.
Finally, we get to see you in person again.
Yes.
And that all starts probably this week. I assume you guys are at the Simba awards and show this week. Yeah. So good. We're excited to see you out there. Thanks so much, Bryan, again. For Bryan and for CMI, and I'm Chris Baker, and thank you very much for watching this Broker Life this week. We'll be back again next week with a brand new episode.